Gentlemen, welcome back. You're back with MGTOW Money. Today's topic, we're going to be talking about an investment they don't want you to own. It's the Outlaws investment. Before we get to that, though, I want to sincerely thank all of the Patreon supporters of this channel, as well as those guys who bought me a cup of coffee on the last video. I urge you in the strongest terms possible, please consider being a Patreon supporter of this channel, or at the very least, just buying me a cup of coffee. Of course, for those Patreon supporters, I answered all those questions in great detail. I hope those responses were helpful to you. If not, feel free to reply back. Let's roll on to today's topic. I'm going to start with some quotes when I'm talking about this outlawed investment. It's a barbaric relic. It's just a rock. It's a poor investment that yields nothing. It pays no interest. It pays no dividends. As one commenter said a couple of videos ago, no one under the age 25 really wants it. And lastly, the important point that should be made about this is that actually in the United States in 1933, this is a factual statement. I'll include a clipping from the Presidential Act. This investment was outlawed. This investment was outlawed for nearly 40 years, gentlemen. You personally couldn't own this investment for over 40 years. What investment am I talking about? Raise your hand if you know. The investment I'm talking about is gold. Yes, that rock was outlawed for approximately 40 years from people owning in the United States, and including even in 1959 in Australia, for example, I was reading that they attempted to outlaw it there, where they were forcing the exchange of gold for paper money. So let's roll on to terms of why you should allocate some percentage of your investments. If you have $1,000, you have $10,000, you have $10 million, why you should allocate at least 5%, possibly even up to 25% of your overall investment portfolio to gold. Let's get into specifics here. Number one, the most important fact about gold, not an opinion, is that it has been a store of value. In other words, it's had value for over, gentlemen, get ready, 5,000 years. I didn't say 500 years, gentlemen, over 5,000 years. Nothing else, gentlemen, nothing else in human history, as far as we know, has ever had value for that period of time. So effectively, since the dawn of civilization, people have been using gold as an exchange of value. There's a familiar saying, it's been around for years, an ounce of gold has always basically been able to purchase a high-quality man's suit. So whether you're at 100 years ago or 500 years ago, you could purchase what would be the equivalent of a high-quality man's suit with an ounce of gold. While, of course, the prices fluctuated through the years, this has always held true. The bottom line is, gentlemen, gold is money. When I say money, in simple terms, it acts as an exchange of value. It's something you can exchange for something else of value. You cannot say that without getting into all the details about paper money, which frankly, all paper money, every single currency throughout history, gentlemen, given enough time frame, a long enough time frame, has fallen to its intrinsic value, and that intrinsic value of paper money, of fiat money, frankly, is zero. Let's move on. Number two, gold is a very important counterweight. It's a good teeter-totter effect to stocks. Most people put most of their money just simply into the stock market. They don't look beyond that. Of course, they might also have some money in real estate, in particular their home residence, but outside of maybe stocks and of course some real estate, that's about it. Gold can be a very important counterweight as a non-correlated asset to stocks in particular. Generally, as stocks go down, gold will stay the same, if not go up dramatically. Gold can be especially important in times of high inflation. We saw extremely high inflation, at least in the United States, during the late 70s and early 80s. We have not seen high inflation in the Western world in several years. Of course, and many people are saying we won't see high inflation for many years. But then when most people are saying it won't happen, it probably will. The point is, you want to be prepared. You want to have your assets in things that are non-correlated outside of the stock market. I highly encourage you to do that. Let's move on to point number 3. On a shorter time frame, when we're talking about over the next 12, 18, 24, 36 months in the future, as best as anyone can possibly predict the future, it does look like that gold seems to have bottomed and does seem to be gradually increasing up. And you've heard the old saying, gentlemen, buy low, sell high. Today, I'm talking about today's terms where gold is around $1,320 an ounce. It seems to be a reasonably good buy. It peaked as recently as 2011, so approximately 6 years ago, at 1,900. So we're still way off the high, and it bottomed, by the way, at 1,100. So we're not that far off the bottom. It seems to be definitely have developed a base here around the $1,300 level. Again, these are simply probabilities. There are no guarantees, but the point being is that the downside seems to be relatively low and the upside seems to be relatively high. I would do your own research on this, gentlemen, but I highly recommend you at least consider buying some gold, holding it. And we're going to get into how you can do so right now. Owning physical gold is the best way to own gold, in particular if you plan on holding it for a long time. For many countries in the Western world, their mint, your country's respective mint, manufactures the actual gold that you can purchase, whether it be coins, bars, etc., whether it be in the United States, Canada, Australia, UK. Those countries actually have gold mints that you can actually purchase from. Correspondingly, you could also go to a private dealer. For example, you can look on the internet and see a very prominent one called Kitco, Kitco. There's another one called APMEX, APMEX. These are, again, private coin dealers. I have nothing to do with them whatsoever. I just know that they do a very good job. Thirdly, I would say for some of my other friends, especially those that are in Asian countries, as I'm sure you know, gentlemen, those gold shops are on every street corner, basically, and there are certain neighborhoods where they literally are on every street corner. So again, this is very, very common. You get outside the Western world, in particular into Asian countries, including South Asian countries, you will find plenty of gold shops. Let's move on to an alternative way to own gold. And this is especially for those guys that want to trade gold, and that's owning paper gold. You can, of course, own gold through exchange-traded funds, ETFs. I did a video on that. For example, I'll give you a symbol for a couple of them. GLD is a very popular ETF. Another one is PHYS. That is another popular ETF. There is also a closed-end mutual fund. Full disclosure, I own this particular mutual fund that has a mix of gold and silver that's based out of Canada. The symbol on that one is CEF. That's Charlie Edward Frank for those that are taking notes here. Let's quickly summarize, gentlemen. There are 3 basic reasons why you want to own gold. Number 1, it's been a store of value for 5 millennia. You can be virtually guaranteed if you buy gold today, you can hold it the rest of your life and it's not going to go to zero. Number 2, it acts as an excellent counterweight to times of inflation, to times of stock market distress, to times of global meltdown, etc. It's an excellent, superb hedge or an insurance policy. Number 3, on a shorter time frame, gentlemen, when I say shorter time frame, 12, 24, 36 months out, you could make some very good money, I'm thinking. Yes, I've got out my crystal ball here, gentlemen. It's not perfect, but it's looking pretty good right now for gold, in my opinion. Let me conclude by saying, of course, do not put all your eggs in one basket. Do not put all your investment dollars, euros, etc. into one idea, whether that one idea be stocks, real estate, etc. Spread it around, gentlemen. I've emphasized this many, many times. It's very important. Putting some portion, though, of your investment dollars into gold is a great idea, and it's an outstanding hedge against global meltdown, which who knows, may or may not come. Let me finish by saying, gentlemen, of course, buy me a cup of coffee if you found that helpful. You can see the links in the show description. Thank you for listening. As always, John Galt, out.